Good afternoon. Hello, welcome. Thank you for everybody being here today. We're broadcasting live from Park City, Utah, where I am. And Wayne, you're in California, right?
Sausalito, California.
Sausalito, California, right over the bridge. I've been to that area, and so it's San Francisco area. So welcome everybody. Thank you for being here again, and thank you to the Family Office Insights community for being so resilient through all this COVID business and participating well as you have in these webinars. So glad to have you here and being vigilant, let's say that. So a little housekeeping. Zoom, you're all familiar with this. We can't see or hear you, but we certainly encourage you to ask any questions in the chat box or the Q&A as we go along here and as they come to mind. We've got quite a few people on today, and so we want to do our best to get to as many questions. So as they come to mind, please post them, and we'll get to as many as we can. This is going to be recorded, and so as you go and listen to the presentation here, if you would like to review it or share it with others that might benefit from knowing about what you're going to learn today, in a few days, you'll see it posted on the Family Office Insights YouTube channel, which you can view it at your leisure and share it with others. Also, if in chatting today with Wayne and going through the presentation, if there's others that you can think of in your world that might benefit from knowing about what SolarCapex is doing, then you're certainly welcome to share it with them. And we will make sure that everybody who RSVP today will be in direct contact with Wayne and feel free to chat with him directly. So with that, Wayne's got a deep and storied history in tech and a variety of other things, and I'm going to ask him to share a little bit of the background, and then we'll go right into the presentation. So again, thank you everybody for being here today. Wayne, welcome. Take it away.
Thank you, Arthur. And thank you everybody for attending this morning or this afternoon, whichever the case may be. It's still morning here in California. Let me take just a second and tell you, or a minute or two, to tell you a little bit about my background and kind of why we're here today. I started out on Wall Street as an investment banker with a company called Donaldson, Lufkin and Jenrette. Then I left DLJ to go into the alternative energy business many years ago and started the first large-scale wind energy development company that was backed by Chevron, and we put together a whole couple $1 billion worth of projects for PG&E, Southern California Edison, the Bonneville Power Administration, et cetera. And then over the last 25 years, I got out of that business when the economics went against the alternative energy business for a while, and developed technology companies. But a number of years ago, got very concerned about what originally was going to be what I thought was going to be the energy crisis, and I saw it morph into the climate crisis. And that's when I got involved in using technology, which we're going to be talking about today, to help change or accelerate what I call the clean energy revolution. So this morning, what we're going to talk about is using Fintech to help the climate. And I am highly motivated by this issue, because I feel like we've got to really accelerate the clean energy revolution, or the climate that we're going to leave for my children and my grandchildren is not going to be a very pleasant place to be. So I set out to solve a problem, and the problem that I saw was to accelerate the clean energy revolution. And I set out to do this using technology a number of years ago. And we developed all of the technology that I'm going to be talking about over the last 5 or 6 years, technology we're going to be talking about today. And what we're talking about today is repositioning that technology into the world of solar development. So the mission of our new company, which is called SolarCapex, is to use Fintech to bring in an incremental $1 trillion of project capital into the solar world over the next 10 years. And the primary reason we shifted to focus on solar is because solar technology and solar, and now called solar plus storage, is now the cheapest form of generating electricity in most places in the world. And in the next 5 years, it will be the cheapest form almost everywhere in the world. And when you look out over the next 10 years, solar is going to become the dominant, will hopefully become the dominant energy source of electrical energy in the world. So our mission is to use technology to accelerate the clean energy revolution by making the process of building these things faster and cheaper. The problem that we're solving and we're trying to address is that the current way that people do project financing, let's call this project financing, the current process by which investment bankers and brokers and solar developers do project financing is very slow, inefficient, expensive, and most importantly, it doesn't really scale to meet the climate crisis. We have to bring a lot more capital to bear on this problem, and that's why we're using technology now to try to accelerate the clean energy revolution. What we developed over the last 5 or 6 years was a platform basically that is used to connect investors with solar with projects. Originally, we were focusing on other clean energy projects, but now we've shifted to focus exclusively on solar and storage. This is a proprietary system that consists of 2 major components. There's the project engine, which basically is a technology that allows us to analyze and package and structure project financings. And then there's a transaction engine, which is a transaction technology that uses artificial intelligence to match the projects with the investors and do it extremely efficiently. And basically the simple model here is, if you want to think about it, if we have profiled all of the capital in the United States or in the world that was interested in renewable energy projects or solar projects, and then use this system to present those projects to investors, we could match a project with the right investor and do it in a few seconds, when now today it takes often weeks, months, and to do the same thing manually takes weeks and months, and we can do it in seconds with this technology. In short, we increase the velocity of capital 2 to 4 times. And at the same time that we're increasing the velocity, we reduce the transaction costs by up to 75%. And when you're talking about multi-million-dollar projects, you're saving a lot of money if you can reduce the transaction costs by that much.
So Wayne, 1 second, if it's okay. We've talked a little bit about this. So this tech that can eliminate a lot of the friction is largely built. Is that correct?
Yes, the technology has been built, and we actually were operating it for a few years. What we have to do now is to reposition or recode the technology to work in the solar area and to develop new UI, UX interfaces for the technology so the investors and the developers can use the technology directly. We seem to have lost Arthur.
Yep, no, I just went on mute.
Oh.
So the plumbing is there. It's just the usability, user interface, easier to use is what you're working on now.
Exactly.
Yep, perfect.
We're reconfiguring it for the solar business and for institutional investors to use directly.
Perfect.
So basically, this is a simple diagram that shows you typically when a project financing consists of packaging the project such that it can be presented to investors, then going out into the world of investors and developing a short list, which means finding a bunch of investors who would be interested in looking at the project or negotiating with the developer to come to terms if possible, then to go through the decision-making process of whether to actually engage with the developer, and then go through the due diligence process. That typically takes somewhere in the neighborhood of 4 to 5 months. Using this technology, we can reduce that time down to less than a month, and in the process save a lot of money and reduce the transaction costs. So that's a simple diagram of what we do. I want to take a second here and talk about the team, because this is really important. We've worked together for the last 5 or 6 years working on this technology. I told you a little bit about my background. Derek Gauget, the guy in the upper right-hand corner, is the genius really behind this technology. When we first set out to do it, all the investment bankers that we talked to said it couldn't be done. It took us longer and cost more money than we thought it was, but Derek was a guy who had been developing just-in-time inventory control systems for the auto industry, which are much more complicated and much more dynamic than project finance. And he's a guy that has about 27 patents to his name. Chris Caldwell's our CTO. Chris is a very experienced and very smart software developer. He ran a software development team with 100 developers. He's one of those rare coders. It's 10 times better than the average systems or software architect. Jesse Atkinson is our solar expert. Jesse spent the last 15 years developing over 1.2 megawatts or gigawatts of projects around the world, and most recently was the president of Kratos, a software development company. Gare down in the left-hand corner is a venture capitalist, spent the last 25 years as a managing director of Next 47, which is Siemens venture group. And Riyad Fasani in the lower right-hand corner was president of BP Renewables, which is British Petroleum, and ran their renewables operation until they had a problem with the Horizon project in Gulf of Mexico and got out of the renewables business. And since that time, he's been developing utility and commercial solar projects in the United States. And this is the team that has worked together. So we're not learning to get along. We've been getting along for a long time, and I feel this is one of the best teams of people I've ever worked with. So just briefly to talk a little bit about the new business model, we're focusing on solar, and we focus on what's called the buy side. And the business model is to create a deal origination network for institutional investors and family offices, which means that we build this technology and make it available to the institutional investors and family offices who want to invest in solar projects. And we make it easy for them to find the projects, analyze the projects, negotiate the terms, and basically make an investment in solar, mid-market solar projects. We charge a 1% transaction fee or a success fee only if the investor finds a project. These fees are somewhere between 50 and 75% below the traditional fees that are charged by bankers and or brokers. And because the technology is doing most of the work, this is a very high margin business. It's a very efficient business because computers are doing most of the management of all the information. If you think about this a little bit, project financing is really an information processing problem. That's why there's a significant opportunity to bring advanced information technologies, which is what we do, to this financing process. And we focus on the mid-market solar and storage projects. Those are the projects between 2 megawatts and about 100 megawatts. We're not doing residential and we're not doing the big utility projects. We're focusing on the mid-market commercial and small utility scale projects. And these projects typically cost between 2 million and 100 million. And our objective is to grab 20% market share in the next 5 years. Fintech, as you know, is impacting every financial transaction in the world today, and we're the first ones to bring it to the world of project finance. Just briefly, the transaction economics is a typical transaction fee for us for a 10 megawatt project would be $100,000 fee. Unlike most financial or fintech companies that are basically in the commercial or in the retail sector, the retail sector meaning consumer market, we are in the business to business side. So we have a small number of transactions with very large fees. And so a transaction fee for us on a 10 megawatt project would be $100,000. And that transaction, including amortizing all of our costs and everything, would cost about $17,000, which gives us about an 80% operating margin. And you can see from the graph on the right, the larger the transactions, the bigger the profits and the bigger the operating margins. So this is a potentially very attractive and extremely lucrative business, and scales very quickly, and most importantly is very capital efficient.
So would you say on this slide here, Wayne, that the TAC, project acquisition, project evaluation, investor acquisition, customer support, and G&A are largely fixed, and that's why the margins get bigger?
Yeah, they're largely fixed. Our primary cost, once you get the technology working, our primary cost is just driving projects and investors onto the platform. Because theoretically, if we've got all of the investors in the world already on the platform where they've created profiles so that we know exactly what their sweet spot is, the concept here is very simple. If I know exactly what an investor's sweet spot is, then I can very accurately present projects to them that meet their criteria. What nobody has ever done before is to profile all the capital out there in the world. And that's what we're doing with this technology. That means that when a project comes in, we can very accurately say, once we screened the project and vetted the project and packaged the project, we know exactly who's going to be interested in it because we've already gone out and profiled all the capital.
And there's a very large appetite of that capital for this sort of thing, correct?
One of the principal reasons we went and changed the business model is because in the world of capital, in the capital markets today, enormous amounts of dollars are flowing into the climate sector. It's in the trillions of dollars. So we're talking about an extremely large market, investors looking for what are called ESG investments, impact investments, green sustainability. There are huge green funds coming out, green bond funds. There is literally, this is a multi-trillion-dollar opportunity.
Great, thanks.
So if we look at just briefly before we get to that, if we look at our competition primarily is the existing developers, advisors, investment bankers that are doing the manual transactions today. And you can see from this diagram where we look at from low cost to high cost and from slow to fast, we're in the upper right-hand corner, which means we can do transactions much faster and cheaper than the manual systems. And as of today, there's nobody else that's got a technology like this yet. So we're what you call the first mover. We have a first mover advantage. When you roll this all up into a business model or a pro forma, what it looks like is that and you can see across the top, we've got the project investors. These are the investors that would be profiled in the system. We know from Bloomberg New Energy Finance that there's about 1,300 institutional capital sources in the United States that have and do invest in clean energy and solar projects. The second line shows the number of transactions, and you can see in year 5 that we're talking about projecting about 2,000 transactions a year. Right today, there's about 20,000 or 25,000 transactions in the solar space today. So we're looking at a 10%, well, a smaller percentage than that because the market will be growing over the next 5 years. And you can see that in the 5th year, we would be moving about $20 billion of transactions into solar. That would generate something in the neighborhood of about 160 million of revenues and about an $80 million pre-tax bottom line. So this is a potentially very lucrative business. Come on, let's see. In summary, we're talking about an addressable market that's somewhere between 3 and 5 trillion. The solar market between now and 2030 is between 3 and 5 trillion, depending on how fast the capital can be deployed. And it gets closer to the 5 trillion if we get this technology rolled out on a significant scale. And we would like to accomplish or achieve the objective of getting 20% of that market share, which would be $1 trillion of transactions over the next 10 years. The technology we're talking about has already been developed at a cost of about $5 million. We've got an very experienced technology team that's worked together. The business scales based on network effects. This is one of those very rare businesses where the more people that use it, the better it works for everybody. So it has what's called the network effects opportunity to grow very large, and we could get, if we were lucky, a very large percentage of the market share. We've already enrolled about well over $1 billion of capital sources. Institutional capital sources have agreed to start seeing deals on the platform. And as I said, this is extremely capital efficient, meaning that once the engine starts going, because the transactions are very high margin, the company becomes self-financing. So we're not going to require hundreds of millions of dollars to develop this technology. Finally, we're seeking right now $3 million. What we're going to do with that $3 million is build a new UI UX interface, which means we're developing new technology to make it easier for the developers and the project investors to actually use the system. In the old model that we had before, it was against the regulations for developers and investors to use the system, so we didn't have any UI UX interface. It was all for internal operation or for internal use. So a significant portion of the investment is going to be used to develop the UI UX interface, recode the project transaction engine with new software to speed up the transactions, hire marketing and development staff, and begin revenue operations. And we're reasonably confident we could probably we may be able to get to profitability, or at least to break even on this $3 million once the engine starts operation. So in a nutshell, that's what we're doing. We'd love to have conversations with people who would like to find out more about it. And we can do that with another online meeting with individuals or family offices who would like to talk to us.
So how much of the investor base, the 1,300 institutional investors, are in the system presently?
Oh, we've only got 5 or 6 because we're not able to provide, we don't have the marketing resources to start driving. We haven't finished the technology. We've got, as I said, to develop the UI UX interface so that it makes it easy for the investors to get into the system. So right now we've been doing it manually. We just started doing it manually to validate that they would in fact use the system and pay the fees.
Right. So I get it. So they would end up profiling themselves as opposed to you guys doing a data dump from Bloomberg and that sort of thing, right?
Yeah, Bloomberg nobody has the information that could do a data dump. The investor has to basically do the profiling themselves because, for example, what they do is they tell us what kind of capital they have: development capital, equity capital, tax equity, or debt. What kind of geographic preferences do they have? Oh, I only invest in California projects, or I only invest in South America, or I like Southeast Asia. What are my hurdle rates, deal sizes, deal structures, all that kind of information. We have to know that so that we can very accurately show them only the projects that they would be interested in. So the fastest way to do that is to have them do it. And it takes an institutional investor less than 10 or 15 minutes to do it. And the system is totally confidential. Nobody knows who they are, who's out there. Only the system knows, and only the investor is disclosed to a project when the investor decides that they want to talk to the developer. So the system is completely confidential.
Totally makes sense. Can you jump back to the pro forma page for a moment?
Sure.
So you said that there's presently 25,000 projects that get funded. Is that accurate? Did I hear that right?
No, I said right now there's about 25,000 projects being built in around the world today in the solar space. Right now, today, in our market segment, there are about 1,300 projects between 5 and 75 megawatts that are looking for capital in the United States, and that's just the US market. And they're looking for about $40 billion of capital.
So in your sweet spot,
Yeah,
in the not massive ones, but in your sweet spot, there's 1,300 that are seeking capital.
yes, that they're looking for capital. Mhm. And they're in various stages of development.
And I'm sorry, I just want to make sure I understand. That's 1,300 in your sweet spot.
Yes,
Yeah.
that's projects between 5 and 75 megawatts, and our sweet spot is between 2 and 100. So that's the core of our sweet spot is the 5 to 75, and that just happens to be the way that the statistics track them. So we use that as our kind of starting point.
Yeah, totally makes sense. And so is there 10,000 big ones, or are there 500 big ones that are above your sweet spot?
Oh, there's probably only 500. It's not 10,000.
Yeah.
The larger the projects, the smaller the number, obviously. The number of utility projects right now in the United States is probably a couple hundred.
Yeah. And how long would it take for you to build out the user interface if, with that funding?
Well, it would take about 6 months to make the simple answer. We can actually start operations manually, which is what we're planning to do. While the software is being developed, we would actually start doing manual transactions because we only have with a handful of investors, and if you're lucky with a couple of projects, we could actually start doing it manually in the back room, if you will, by profiling. We can start the profiling right away manually, which is what we're doing. And the same with projects. It just happens to take us, an hour, as opposed to doing it a few minutes and letting the investor do it. We can do it manually by calling the investor and writing down and keying in the information ourselves.
And what so far with the ones that you've done manually to test the market, are they pretty inclined to acquiesce to use this sort of thing?
We haven't found any everybody's very interested in using it because it doesn't cost them anything. And because unlike the what are called bulletin boards, the way our system works is that an institutional investor doesn't even see a project unless it meets their criteria. So they're not looking at hundreds of projects and throwing them away. And I'll use as an example, True Green Capital in Westport, Connecticut is a $500 million solar fund. They invest in 1 out of every 20 projects that they look at. So if they were using this system, they would probably have a hit rate of probably 1 out of every 4 instead of 1 out of every 20, because they wouldn't be seeing projects that are of no interest to them at all.
And they're a likely user, right?
Absolutely. No, they like this. They like the technology and they like the system a lot. They'd like to have it. They'd like to have it today because they got to deploy $500 million worth of capital in the next year to 2 years.
Yeah. So I'm guessing at this, Wayne, I think we talked about it, but they don't see the projects until it's a match. And is the way you perfect your interest in getting paid is if they agree to look at the match, then they have to pay you?
No, they can look at the match and they don't have to pay us. They don't pay us until they actually write a check to the developer and in effect an investment.
No, I'm sorry, I wasn't clear with my question. But if they do follow through, they do have to pay you.
Yeah, sure.
Yeah. Yeah. Well, I don't mean to think that there's nefarious intent with people, but they could find the project and potentially circumvent you, but they have no reason to do that, right?
Well, the way the system is designed, we don't disclose the developer until they've signed an agreement and all. We got a lot of legal. We're not worried about not getting paid, if that's the question.
Yeah, no, and I'm not just suggesting that that's going to happen. It's just I'm just thinking of things that others might be thinking of.
Sure.
Yeah. So how far along are you in the raise now?
Well, we haven't raised any of it yet. We just started a couple, 2 months ago.
That's right. I think you did say that to me. Yeah. Yeah. And so far,
we've got $200,000, but I don't count that significant. So
yeah. And so far, have you had discussions with potential investors and if so, how's it going?
Well, the only one that we made a real serious presentation to is NYCA, which is a venture fund in New York, which is that invests only in fintech companies. We made a presentation to them last week. They are still in the process of developing what they call their climate thesis. So they liked what they saw, but they haven't developed their thesis yet. So they don't know yet whether they're interested in proceeding into due diligence.
And if you had to say in, quickly, medium, and longer time, you can raise the money in, you hope to raise the money in 2, 3, 4, 5 months, or?
Yeah, absolutely.
Yeah.
I guess what I feel is the biggest issue for me is I feel that the climate's on fire and we've got an urgency and we got to do something. And everybody has been kind of, been slow on the uptake with regard to taking actions that are going to actually have a significant impact on the climate. And the reason that I'm doing this is because I've spent a lot of time looking at the climate issues over the last 25 and 30 years. And I looked for an opportunity that had the highest leverage. This is a business where a small amount of capital, $5 or $10 million, will actually build a technology that will get $1 trillion of additional capital invested in solar technology that wouldn't happen without it. That's an extremely high leverage type of investment. So I'm anxious to get this thing going, and I'm anxious primarily because I live in California and we're on fire.
Right, it's literally on fire. Right.
Literally.
Yeah. Then there was some rain, but I don't know how much that helped. Right.
Well, it helped some, but not.
Yeah.
That's not the long-term solution. Is not rain. We've got a climate problem, which is much worse than whether we have rain or, because the weather patterns are changing dramatically since I've moved to San Francisco, and in the time I've moved here, almost all the fog has disappeared. Used to be San Francisco was the fog capital of the world, and almost it rarely gets foggy anymore. And we're now in an extreme drought. We haven't had the reservoirs in average in California, in Marin County where I live, they were down to 35% the day before the rainstorm. They've never been this low.
Wow.
So it's a very serious problem.
Wow. Wow, that's really interesting because I wouldn't have otherwise known that. That's not something.
Well, if you want to hear an interesting statistic, think about this. In California, the worst year of wildfires, forest fires, was last year. We lost 4 million acres of forest to the wildfires. This year, we've lost 2 million. This year alone, from the beginning of the year till today, 43 million acres have burned in Siberia.
Wow.
Siberia, not California, by Siberia.
Which we all think of as snow and cold and water.
Exactly. And what it's doing is it's melting the permafrost. And as the permafrost melts, that releases even more CO2 into the atmosphere. So we've got a serious problem. And that's why I'm very anxious to get, that's why I've been working on this problem for a long time. And we're primarily interested in finding investors who feel a sense of climate urgency like we do, to help us get this thing into the market as quickly as we can.
Yeah, an alignment totally makes sense. Yeah. So you heard it here, folks. So if you have an interest in helping in this, and you have an interest in deploying capital in this sort of thing, you can actually help promote the thwarting of climate change. I didn't realize it was that dramatic. So one other thing, prior to the 4 million last year acres in California, what was the next closest? Do you know that offhand?
Oh, it was probably a few years before that. It was probably 1 million acres.
Yeah. Wow.
It used to be only 100 or 200,000. Now it's in the millions every year. It's the new normal in this year's California firefighting budget's over $2 billion already.
Oh my God. Wow, that's crazy. Wow. Well, I hope you're safe, Wayne.
Well, I live on the water, so I'm
Yeah,
safe.
right. Yeah,
Except I'm worried about the earthquake now.
yeah, exactly. So, listen, folks, we're super glad you're here with us today. We're going to make sure you get in direct contact with Wayne, and so you can pursue it yourself, or people that you know that have an interest in this sort of thing. I think I mentioned this to you, Wayne. We had on September 5th, 2019, 250 people in 211 family offices at the UN. And I did that out of frustration because all the people would get up on a conference and the stage and talk about how bad things were, and then they get off the stage without a solution.
Yep.
And so that conference, and I'm not in the conference business, uh, spawned a lot of really interesting people, and they anecdotally are doing stuff as a result of that conference. So I'm patting myself on the back for putting 15 people who had businesses that actually were impact businesses, and they could demonstrate the impact, and there were people rallying around them. And we didn't make any money. We just paid for the conference. And it was super interesting that there actually are people out there that have an interest in voting with their checkbook and getting involved. So I hope some of them are on the call today.
I was at a family office conference a few years ago, and it was on the impact investor it was a session on impact investors. The room was completely packed with people that were interested in impact investing. And then the moderator asked how many people had actually made investments or were actively investing in impact types of projects. And it was less than 5%.
Wow. Yeah, I think that, it's hard to say exactly why, but I'm imagining that, it's investments catalyzed by not only a desire to do well and have an impact, but there is a stigma that it's not uh, uh, largely a revenue generating or a profit generating enterprise. And I have to tell you, the 15 people that stood up on the stage at the UN, they were all making, money way beyond what would otherwise be a coupon that was not satisfactory to deploy company capital. So
Sure.
it was rewarding to see that happen. All right, so we have to wrap it up, but you want to have a closing statement, then we'll make sure everybody gets in touch, and you can follow up with everybody.
Well, I appreciate everybody joining us this morning. And if you're interested in working on the climate issue, this is the highest leverage opportunity that we've been able to find. And we'd love to have a conversation if you'd like to get more information. So please give us a call. My phone number is 415-686-6966. Or you can reach me at wayne@solarcapex.com, or you can reach me through Arthur and the family office.
Insights, yep. So yeah, we'll make sure everybody has your information and vice versa. And super glad you were here today, Wayne.
Thank you, everybody.
Yeah, I'm glad we were able to do this with you. And as usual, thank you everybody for joining us today and spending the only thing you can't make more of, and that's your time with us. Till next time. Thank you.
Thanks, everybody. Appreciate it.